Good morning, good morning, everybody, and welcome to yet another episode of Beyond Bulls and Bears. The market this week, as expected, was dominated by Mr. Donald Trump. The much-awaited policy on the tariff came out, and it was a large. What was interesting is the fact that he has done a minimum 10% tariff on every country, including those where he has trade surplus and not only trade deficit. What was also interesting is that there were tariffs at 26% for India and a higher tariff for China. This kind of impacted the US economic markets more initially, as there were talks of this leading to higher inflation and lower interest rate cut. Along with that, it were talks that this might lead to a lower growth and hence a recession for US economy also. This kept the markets down, initially US, and had a ripple effect on rest of Asia. So Indian market was down 2.5%, slightly more than that. What was even more interesting was our portfolio, as expected, was immune from this. In fact, we fell very little compared to the market only because of the impact it has on Tata Motors. The greater impact was seen in IT sector, which was already correcting and yet it corrected more than 9% this week. Just shows the kind of effect the sentiment has on the market and how hollow the market is currently, where a hard policy drives the market. The real impact of the market will be seen over the next 2 3 days because at the close of Indian markets on Friday, China announced a reciprocal 34% tariff on US goods. The fear of trade war has come true. Countries will either negotiate. What will happen now? Let's understand that. Either countries will go on the negotiation table, as probably India is, Mexico and Canada are, or they will go on a reciprocal tariff like what China did, or some may even start taking it negatively and start creating a, a parallel trade with other countries. These are the options. Uh, I will say that the first option has the limited downside from immediate effect, but it means that Trump will know that he can negotiate anything and with anybody. And hence, some aggressive countries may go for what China did. I think the biggest impact of this will be volatility in the markets. I think Indian markets relatively are immune to it because as I had explained in the detail over the last few sessions, that the broader impact on India is not as big negative as it sounds, but equity markets react and hence markets will be volatile. What will drive the market going forward will be earnings. As the earnings kick start, it's April. So I think broadly the timing of this event is actually good for the Indian market investor, where such a volatile event will get overshadowed if the earnings are good. So, so the real impact will be very stock specific based on earnings. We will get news, we will get, I will say, hearsay rumors about what is happening on this topic. The topic is not done, only the announcement is done, which means volatility is here to stay. But I strongly believe that earnings will create a swing in the market, and as soon as the earnings come, the Indian market will become very stock specific. Indian market has given away 50% of the gain they did from the bottom earlier this month, earlier in the month of March. And technically, looking at the SGX, I think the support will be the double bottom at 21,900 something. SGX is down 2.5% on Friday closing, given that the US Will India close on Monday as low as that? I probably think no, uh, because it's not India's specific issue, and India is better off. FIs may remain net seller in the market. They were buyer in March, but they may remain net seller because of the global geopolitical scenario in terms of tariffs, war. Uh, but beyond that, I do not see much concern. I still believe that the worst is behind. This volatility will lead to a better situation for the investors over the coming weeks and months. Other than that, there was nothing much to talk about in terms of market. The business updates were good from companies. Banking and financial showed a quarter-on-quarter growth in advance deposit. I would say that a couple of banks did better, while others didn't do that well. Business updates from Trend, DMart, Dabur was also not very disappointing in the nature. So, from a fundamental news flow perspective, the market was pretty fine. I think the pain, if any, will be more on mid and small caps as more beta and more leverage will come down in the market due to the volatility, leading to a situation where we could see a more pressure or lack of liquidity on mid and small caps. IT sector will continue to be bearish while they have corrected a bit from the top, but I think still the valuations are above the mean and there's larger scope for correction. If you guys remember, last year in July, in July end, we came out with a report saying that because of Trump and a lot of other factors, we are bearish on IT, and that is playing out pretty well now. Coming to the second topic which I want to discuss, it's a financial year end, and it's important that we appraise how we did as a strategy, how we did for our client. StaG, the fund was launched on 26th of June 2024. As a strategy, we are at probably at par with Nifty, down 4% since the time we came live. This is strategy we also ran under our RIA, and where we, for the financial year, we outperformed Nifty by 300 bips. Nifty was up 5 point some percent, we were up 8 point some percent. It slightly varies from portfolio to portfolio. What drove this performance was the fact that our portfolio remained insulated from global macro. Our portfolio had a better earning growth compared to Nifty as we had little laggards in our portfolio. And, and some stocks like Bharti contributed a lot to this growth. ICICI Bank continues to be the best bank, and there are many more tails to this success. We believe that we will continue to do well in this success. We believe that this strategy is XIRR of last 6 years, which is close to 20%. We will continue to deliver at least that much, if not more, for the next couple of years in spite of the volatility. I am pretty confident that this volatility, when it is over, we will look back and say that this was a wonderful opportunity because the inherent strength of the Indian market continue to be very strong. The earnings will be a shot in the arm. The commentary will showcase that. If you look at the business update, we are seeing a directional move. There is enough move from RBI. RBI is moving from 7 to 9, the MPC. And it will be interesting to see how they react to this development because RBI was expected to cut the rate, but with this tariff, how will they react? I think they will want to support the business and the markets and the economy. And then my belief is we will see a rate cut in the market from the MPC. Post that, the result season will take a start. I don't expect much from IT, while banking, auto, consumers should do better. What will be interesting to see is the commentary of IT companies whether they are seeing some traction in the US post the US election in terms of discretionary spend. In my next week, I'll cover some of the earnings expectations based on the results for the week. Today, I will leave it at the broader point. I don't see the market going much below from the current level, and every dip for me will be bought into. But with the way the global markets and the global macros are, volatility will be there. And I think it will be a stock specific market where whenever I analyze, I find Senora's portfolio to be fairly immune to whatever happening on the Trump politics side. With that, I will end my views and will, as usual, will wait for the questions from the audience. You can type it here or you can drop me a message and I'll be happy to answer. I don't see any questions. Thanks for listening to it. See you guys around next week again. Thank you.